Welcome to the Block Exploring podcast, your first step into the world of crypto and blockchain. The Block Exploring podcast is your one-stop place to find quick, clear, and unbiased information on everything in the crypto space. Our goal is to help you grow familiar with the crypto space by growing along with us as we go on our crypto journeys. Follow at Block Exploring on Twitter for our newest uploads and our publishing schedule. We, here at Block Exploring, are crypto enthusiasts working hard towards becoming experts. Today's podcast is presented by co-hosts Tommy and Elias. Find us on Twitter under @SabaiSquared and @OtokoCrypto. Right now you can find us on Spotify and YouTube. Before we start the episode, we would like to inform you that we are not financial advisors. Therefore, nothing said in this podcast should be considered financial advice. Always contact your financial advisor before making any investment. With that said, sit back and enjoy today's podcast. What's up, guys? Welcome to episode 23 of the Block Exploring podcast, News Bytes. Here with me is Tommy. We're going to talk to you about everything that happened this week. Now, I think the past week, price action has been horizontal. There was a slight dip whenever Solana experienced its speed bumps, just to put it lightly. And that's one of the first things we're going to talk to you guys about. Also, we're going to try out a bit of a shorter format since, we're just testing out some new stuff. So let us know how you guys like that. So this week, Tommy, what happened with Solana?
Well, it wasn't only just Solana, but Arbitrum as well, an L2 solution / project for Ethereum blockchain. Both chains went down. It just went down in the DMs and just got wrecked. Basically, Solana has gotten a lot of hype as being one of those quote unquote Ethereum killers. And with most Ethereum killers, what they try to do is increase the throughput, so more transactions can be processed on the chain, which is one of the many criticisms ETH might receive, is that there's just not enough space to accommodate all the transactions that might want to be taking place on the chain. So that's why Solana has been having a big run up. In the past, I think in the last 2 weeks, they've just garnered this huge hype, which sort of came to a standstill in the last few days as the Solana chain experienced a bug, essentially because they couldn't process the large amount of transactions that were there. And what then ended up happening is that the Solana needed like 80% of the validator nodes to then reset the chain, which obviously brings up a lot of discussion about decentralization, the centralized nature of Solana. Yeah. But I think the main issue that most people, aside from all that, aside from this thing just exploding and the whole centralized nature of Solana compared to other chains like Ethereum, is just the disingenuous way that people surrounding Solana are trying to paint this this incident. But what do you think, Elias?
Yeah, I think that the comments surrounding Solana's centralized nature kind of, I think they kind of hit home. I think that's what did the majority of the damage to, if you look at the price of Solana, it dipped quite a bit in a very short amount of time. And I think it's the way that it was handled. And I think the lack of engaging with the audience and the way that they were commenting on, you can just reset it, it's a centralized project pretending to be decentralized, is just a doubt that the management, or at least the PR team of Solana, should tackle, because it's not being tackled at all.
Well, it's definitely not being addressed very clearly. No. I think it's always been understood that Solana has many centralized drawbacks in comparison to something like Ethereum. Mm-hmm. But, people were willing, it had its hype. People were really big on Solana. I mean, people have been talking about Solana for a long time, but only recently have they gone the hype. So it's quite clear that, when it comes to gas fees and that, people are willing to maybe give up some sort of some form of, some bits of their, decentralization,
Yeah.
if they're able to, maybe operate more cheaply on chain. But then, you get situations like this which maybe just make you reconsider, like, oh, maybe this is why we truly want to have as much of a decentralized blockchain as possible, you know. But
Yeah.
what I take issue with is, especially, is in terms of the way that key people, or I wouldn't say representatives, but people within, in the Solana ecosystem, are painting this, this incident where, they're almost trying to just brush over
Yeah.
this incident as if, like, yeah, this is something that just happens. Like, no, this doesn't just happen.
It's not a casual Saturday,
This,
you know.
yeah,
It's not how
exactly.
it goes.
I know, this is not like, oh, this is, Solana is new, we should expect this. It's like,
Yeah.
no, if you're, this is not what you should come to expect, and these are, this is something big that should be, taken as such. And like, I feel like the people who are working on Solana, should take the L and
Yeah.
work and grow from it, because it's not like I don't think Solana can bounce back from this. I think they can, because it's a super interesting project that so many people are interested in.
Yeah.
They can of course bounce back, but like, it's puts the whole project in a negative light when then you start trying to gaslight people about what actually happened.
That's true. And that's what my main criticism of the way that it's dealt with, that's what it amounts to. It's almost gaslighting.
Mm-hmm.
Exactly. And one of my, I think, whenever I think of things going wrong with these kinds of projects, I think of, well, one of my favorite kind of small cap projects is Dodo. You know this. I've spoken about it a few times. A while back, they had an issue. It was like in May, I believe, where a bunch of transactions were kind of like hijacked, and they went to one wallet address, and a lot of people lost liquidity. Eventually, it's all been returned to the people, or the majority of it. But Dodo didn't say, "Oh, this is just a part of. This is just like a, what do you call it, a birth defect, or a startup issue."
Yeah.
They said, "No, where do we go from here?" And they wrote an entire article showing, it's still up on Medium, showing exactly what went wrong and exactly where to go from now. I think it's called Dodo Where to Go From Now post, and then it says the date.
Okay. Yeah.
It's such a good article, and it really builds confidence. I think that a lot of projects see these kinds of issues as things you should put into the closet and kind of hide, whereas it can actually be a very marketable something to show, hey, we can deal with these kinds of issues, because of course they happen. There are very few projects that have gotten off the ground without any, issues. Even ETH had an entire issue.
Yeah. I
The
feel like
split
it's
between ETH and ETH
marginally
Classic.
comparable, but you're absolutely right. Like,
Yeah,
Ethereum had its issues,
yeah. No, but I think that just being transparent about it,
Yeah.
and making this decision and making it clear and not hiding it is the way to go, especially in crypto where everyone wants transparency.
Mm-hmm.
Just say, hey, sure, it's maybe part of the game, because there's not a single project that hasn't had a big issue like this.
Mm-hmm.
But just at least address it and show how it went wrong. At least acknowledge it. I think that's the entire vibe.
Yeah, I think, if you're just honest about it and transparent, like, that's probably just the best policy, especially in a new space where people emphasize that, it's trust. It's about trust. With basically, it comes down to trust,
Yeah.
right? And I think in order to build trust, like, regain trust is what is now they're probably like, the mountain they're supposed to climb up, regaining the trust, probably best, to be honest. Probably best. But, I don't think people are going to hold this against them too strongly. It's going to be like a big blip. It's like a blip in, Solana's existence. But,
That's
I feel
true.
like, yeah, new cycle comes, new cycle goes. People will jump back on Solana if they pick it up.
No, absolutely. Absolutely. And in other news, of course, a project which I think did address the mistakes that happened, or at least the issues that occurred, was Opensea, right? So there was a guy at Opensea, I think.
No, not at the head of product.
At the head of product.
Yeah.
That was his position. And he was basically trading before the NFTs became public, I believe. and then making quick profits over and over again. And he had been doing that for a while, which is something you call it falls under the definition of insider trading. So this guy got canned.
Yeah.
He's out of there.
Yeah. I mean, it's unfortunate that like this is happening, right? Mans
Mm.
was like front running the market basically because
Yeah.
he was abusing his position, his unique position to know like what kind of projects would make the front page
Hmm.
of Opensea, which is obviously like huge because then you know what's going to be first in front of people's eyes and like what's going to be what's going to be viewed as like a hot NFT essentially to trade or to buy or to whatever. So man, the guy would just buy the NFTs as they would go live on
Yeah.
front before the front page as it goes on the front page and just shuffle it through different wallets and then profit off it in his way. But yeah, now but this caused a huge uproar. This caused a huge uproar in the NFT community for sure. Like I saw huge
Hmm.
quote unquote NFT influencers like calling him out, like having huge thread discussions about it, talking about the legality of it, like what you just touched on. Like this could probably be considered insider trading, although like I think a lot of us doubt anyone's gonna take him to court.
Oh yeah.
But it's just such a bad look for like a company that's like OpenSea is like the NFT marketplace. I liken them to the Amazon of
Yeah.
NFT marketplaces
Absolutely.
right now, and it's such a bad look. And like I think I heard it elsewhere where someone was saying like we have so much to lose in this industry because like we have loads of like people in power and with authority to to really mess it up for all of us
Yeah.
in this industry. So like we just don't need this. Like
No.
like it's I don't know, man. If you're in this industry, like it's you know I would like to promote a bit of selflessness because
Hmm.
if everyone succeeds, there's this in this industry. If this industry succeeds, you're probably going to succeed just being in the industry. So
Yeah.
like why taint the industry or like what you're doing or what everyone else is doing
Hmm.
because you want to like make some you want to front run the market for yourself.
Yeah. No, absolutely. This is
I
what I'm
mean,
talking about. I'm
yeah.
currently writing a thesis about like how
Hmm.
NFT marketplaces should be regulated,
Yeah.
and I'm comparing Europe with America. Both are not good as of now. I think they're a bit outdated.
Yeah.
And if you look at what they're focusing on, it's mainly the NFTs. It's not the managing of the NFT marketplace and money laundering and insider trading and all those things. That's not what regulation is focusing on. The consumer is not being protected, and this is what we hammer in every single podcast that we talk about
Yeah.
regulating crypto. Protect the consumer, but don't make it impossible to use the services. That's the main takeaway. I think that's
And don't hamper innovation because
exactly.
then what's the point, man?
Yeah.
You know?
And yeah, and talking about that, I think a while ago we were talking about what was it, fractionalized NFTs,
Mm-hmm.
and how it's like an amazing idea, right? Like you can fractionalize any NFT, and it becomes much more democratized because anyone can buy a piece of you don't have to have a gigantic amount of money because you can just buy a piece of an NFT.
Mm.
And it's crazy because I've been looking into kind of how to regulate this, and now I see a lot of legal scholars writing, especially American legal scholars,
Mm.
and they're writing pro uh, classing them as a security under the Howey test. Now,
Oh.
let me elaborate real quick about what the Howey test is. The Howey test basically is a test which was introduced in what, like 1946, yeah, about what constitutes an investment contract. And it basically is if an individual invests money in a common enterprise and then has a reasonable expectation of profits to be derived from, managing of the company or entrepreneurial action of others,
Yeah.
then it classifies. And this Howey test, I believe, is the thing that is mainly holding back a lot of innovation in the crypto space, including things like fractional NFTs. And yeah, I think a fractional NFT would technically classify under this super outdated definition of what defines a security, because sure, you buy a piece of a communal enterprise, right?
Mhm.
And you have the expectation of at some point selling it, at some point flipping it
Yep.
for a profit, and that profit is derived by like the market function and how others see the product
Okay.
and the
Yeah.
effort of others. But I think that for crypto in specific, you can also see it really depends on what kind of NFT you buy, because some
Mhm.
NFTs are like art
Yep.
that wouldn't per se fall under the classification of the Howey test, because that's not a common enterprise. That's just buying a piece of art. It's more like buying the rights to show the art. You know,
Right.
it doesn't go. It's not that deep compared to yeah a
Yeah.
regular fractionalized NFT. So I
Mm.
think that's really what needs to happen is we need to stop using these frameworks that come from 1946 to regulate something that was birthed in 2008.
Yeah, honestly. But yeah, I think it's, you know, again, it comes back to like the need for clarity. And
Mm-hmm.
then now I want to ask the question of like, who is going to provide that clarity? Because we've heard from various, you know, I think well, chairman of the SEC, Gensler,
Mm-hmm.
he's been now expressing that, you know, the SEC may not have as much jurisdiction over the regulation of cryptocurrencies
Yeah,
and the like. And then I believe NFTs would fall under this in some way, because they're
yeah,
also just, I mean, not just, but tokens,
yeah.
tokens on the, you know, on the blockchain, like cryptocurrency. So like, who's actually going to provide this regulatory oversight
Mm-hmm.
over, you know, fractional NFTs if it's not SEC? But will we see an expansion of like SEC jurisdiction? Is that what we want, or is it going to be just the Wild West, you know, in the,
Well, I
you know,
think
NFT land?
there's a separate kind of board of oversight when it comes to things that the SEC does not really
Mhm.
concern itself with in
Right.
America. I forget the shorthand for it
Is
because
it
they
like
have thousands of
FCC?
the
No.
FCEE or something, or
Yeah. No, right.
FCEA,
You're right. There is another
and
regulatory
it goes
board.
more like about like gas and like the
Hmm.
price of wheat and like these kinds of like
Okay.
prices, and technically they would be more suited to deal with, I think, cryptocurrency, because it just fits the framework. It fits their regulatory background better
Hmm.
than the SEC, which just focuses on, well, stocks and
Hmm.
yeah, securities trading. That's
Right.
what it focuses on. So I think really that's the move that I hope to see. I hope that they just shift the regulatory framework and
Hmm.
stop just pushing. Uh, it's called the law of the horse, right? Like,
Hmm.
should you innovate uh, the legal framework based on technological innovation? So back in the day, there were only horses. When cars came around, uh, American regulators were like, should we create a separate legal framework for cars, or can we just say, yo, we just put the sticker of a horse on regulation for cars?
Yeah.
And eventually they did it, because a horse
Yeah.
can't go 70 miles an hour.
Yeah.
It just can't. So you need a different framework.
Yeah.
And I think the same thing happens here with crypto. I think
Mm.
just it will be a fight, because of course crypto is much more intrinsic to the entire way that countries are governed.
Right.
But I think that at some point the law of the horse will take effect, and
Mm.
we will get regulatory innovations, just because of the fact that it won't be feasible to regulate it with
Okay.
this framework. I
Yeah.
think that's the main takeaway that I want to give the listeners for this week's episode, because
For sure.
it's just a matter of time. I don't think it's possible that we keep this regulation as is. And I think, especially since we're seeing, I think the SEC should focus just on the consumer protection side of crypto,
Mm.
and leave the rest and the classification over to the relevant authorities.
I think I'm with you on that, bro. Yeah.
Yeah,
Yep. I think it's a good note to end the episode on as well.
exactly. So, this was a shorter episode. We hope you like it. Let us know. Follow us on Twitter at @byte_squared, @Satoko, @OtokoCrypto, @blockexploring podcast, and we will see you next week on News Bytes. Take care.
Take it easy.